Now, for more on this story, you might say it has exploded overnight. Stanley Crouch is here. He oversees $2 billion in assets. He's Chief Investment Officer at Aegis Capital. Stanley, welcome back.
Thanks.
So what does an Apple dividend mean to you? Anything?
I think it's important. We've been calling for an Apple dividend for a while. I mean, cash is king, but cash is also returning zero to the shareholders. There's no yield on it. Apple's been very reticent to go after acquisitions. You mentioned Mr. Jobs. He didn't like dividends, but he also didn't like inane acquisitions just for the sake of acquiring other companies. So what do you do with your free cash flow? The argument's always been, let's reinvest it in product and development, but Apple's line item on that basis, even though they are very active in that area, is so minute compared to the free cash flow that it makes a lot of sense to pay the dividend. What I think you brought up, which is very important, is the relationship of Apple's dividend to the S&P dividend yield, which frankly is less than half of its historical 130-year average, something that bothers us, and also how it relates to other tech companies. So I think that's a great point.
You can't really follow the overall market, as Scarlett pointed out, without following Apple because it has such a heavy weight in some of these major indices. $600 a share was hit just a few days ago. And analysts say that's still pretty cheap if you look to a price to earnings basis. So are you expecting Apple shares to just continue on this one-way ticket higher and take the overall markets with it?
Well, we think the overall market is due for that final pullback we've been waiting for. So, we think that Apple might relax a little. It's interesting, even though this news is so important, that Apple's only gotten back to last week's level. So if it was really magnanimous, you'd say 630 right now or something like that. So we haven't seen that, but it also shows you the news cycle is 24/7, 365 because it happened.
So does that mean this is a positive for Apple shareholders, or does it mean this is a buying opportunity for you?
Well, I think this is a positive for Apple shareholders in general. It'll also widen the field because there are certain accounts that are restricted from not owning dividend stocks. So it'll shift it a little bit and give it a little wider participation. But I worry more about Apple's core business if we go into another slowdown, because basically what Apple's done is they've created a market and made it a mass market in an expensive product.
Well, that may be the case, but Apple seems to have survived the biggest slowdown that we've seen in 7 decades just fine. So why would the next slowdown injure the company when the last slowdown didn't?
Let me answer it this way. Mr. Cook's real impact is going to be the next seminal change everything product. It's not this new iPad. It has to be something really new.
So does this dividend, or the prospect of a dividend, really signal a cultural shift within the company? Tim Cook putting his stamp on the company, as Steph was just saying.
I think so. He's got a real Herculean task. I liken him to sort of the aftermath of the folks that came in after Peter Lynch left Magellan or after Mr. Immel took over from Jack Welch. How do you replace a legend? It's a very daunting task.
All right, Stanley, you're sticking with us. We look forward to continuing the conversation with Stanley Crouch of Aegis Capital. In the meantime, Scarlett, welcome back to Inside Track. I'm Eric Schatzker. Let's return to our conversation with Stanley Crouch. He's the Chief Investment Officer at Aegis Capital, helps to oversee $2 billion. Stanley, a few moments ago, we were talking about the prospect of a dividend at Apple. We expect an announcement on that, or perhaps a share buyback from the CEO, Tim Cook, at 9 a.m. this morning. But whatever happens at Apple, that's a single stock story. Doesn't change your view of the market, does it?
Well, Apple's such an important component, so it's interesting to note it's up, but the average is down, so it's kind of where would it be without it, and the same thing with earnings. In terms of our outlook on the market, we think we're very near a topping zone. How hard we retrace is dependent on various support levels, 1356 being the first. If we go through that, then 1320 is the next. 1290 means it's all over.
You were shaking your head when Dominic was talking to us about correlation and how some of that correlation has dropped off because you think there's a lot of complacency in the market. When is that correlation going to come back?
Well, we think it comes back when risk on, risk off meets, of course, and that can happen at any time. What's the tipping point? The sentiment shift is what we look for, and we think that sentiment is what it's all about. We've seen, for instance, last fall when we got a lot of volatility from the summer into the fall, for instance, the metals. Sometimes the metals went with the S&P, the next day, totally against the S&P. So it's really hard to gauge.
But what is the tipping point here? Last time you were with us, you were 50% in cash. Then last week, we had the best S&P week of the year. Have you pulled back? Are you investing all in? Where do you stand?
We like to sell high and buy low.
One more time. Let me write that one down. Sell high, buy low. Got it.
Yeah.
No, I mean, you were expecting a correction, though, 2 weeks ago, as Steph said. So what is fueling this market?
Well, what's fueling the market is a lack of participation, very complacent. If you look at the chart, it's eerily similar to the 2010 meandering, slowing rise to get to the top. Now, on the other side of that, we had the flash crash, and it got really ugly. I noticed the bottom of the flash crash. We had 3 successive lows into June from there. So I'm not saying we're going to have a flash crash, but I am saying that we are very much set up for a correction. Some of the other technical indicators, like the McClellan and others, are not flashing that we're going to have a crash. But we are certainly going to get some kind of correction here, which some would say would be healthy, but it all depends on the support levels. Now, if we hold 1356, we think we're going to head back up as high as even 1470.
When you say 1290, it's all over, what exactly do you have in mind?
If we break 1290, we're going to retest the October lows, and if we break through that, we can get into 3-digit territory.
But is it tough for you to sitting in cash as the market creeps higher and higher? You're anticipating that things are going to go down, but when they don't, how do you sleep those nights?
Well, because we were much heavier in cash when we saw the bottom, as we saw the interim bottom. We got lighter in cash and right after Thanksgiving, and we've ridden this up, and we sell as we go. So as we reach targets, we pare our positions back, and then when we top out, we don't have to rush for the exits, and we'll do the same thing on the short side. So as we decline, we'll add to our short position and go the other way.
Something really interesting happened last week, and that was Treasury yields started rising, breaking apart from stocks for the first time in a number of months. Are you paying attention to this move, or are Treasuries playing catch-up?
We look at treasuries, we look at oil, we look at the dollar index, we look at metals, and the S&P and the Russell. Those are our primary indicators.
But is treasuries telling us something? Are they leading?
Well, they're coming from a very low base. The other thing I think investors piled into bond funds. So the mass psychology, that also tells you something, that we're maybe reaching a top. Earlier, when you go from a 185 to a 235, bond math is kind of ugly, and it takes you a couple of years at those low coupons to make that up. But people don't think like that. They think, I'm safe, I'm in a bond fund.
So those people who are coming out of bond funds, are they going to think about putting their money into equities, especially if companies like Apple start to pay out dividends?
They will, and they're more likely. One of the signs for us of the blow-off top is where everybody rushes in. Complacency, as Mr. Barini pointed out in the correlation, gets really flat, and everybody thinks this is it. It's going to keep going, and once you see those mutual fund flows go that way, you're really close to a top, most likely.
All right. Stanley, thanks very much. I'm not sure it's optimistic fodder for a Monday morning, but certainly something to think about. Stanley Crouch, he's Chief Investment Officer at Aegis Capital, helps to oversee some $2 billion.